Yes, good evening, all of you. You are welcome to this part 13 of workshop on MS Excel, a series of workshops wherein CAU Saran Kumar is taking up various aspects of Excel. Over to you, Saran.
Hi, sir. Good evening, sir. Thanks for the introduction, sir. Hello, friends. Good evening. Welcome you all to the workshop on MS Excel. Today is the 13th week. In fact, we crossed 50% and we just jumped into the another second part of the entire workshop. So we already moved towards the little advanced topics. By the time we go to the end of the workshop, you can see real taste of the entire Excel. So today I'll be concentrating on the topic. Let me share my screen, then we can. Yeah. Last week, ideally, we should cover the financial functions because of index and match has taken a lot of time. In fact, we have covered so many case studies out of index and match. 13th week related, because there is a connection between indirect function and the index and match function. I have covered the 13th week session, something in the last week itself. Last week, financial functions, I did not start because I want to cover the entire financial functions as one session. So today, without taking much of the time, I'll jumping into the financial functions. As you all know, every week we conduct one assessment test. This week, I'm not going to take any assessment test because financial functions take at least a 2-hour session. So that's the reason. Next week, we can have assessment test on all the topics till now what we have covered. Generally, in our assessment test, we keep 10 questions. Since 50% of the syllabus is over, next week, I would like to keep at least 20 to 25 questions. So you can get even more questions also, because 50% is over. So this is the time we need to evaluate ourselves, whether we are following the logics or following the concepts and so on. So today, without taking much of the time, let me jump into the financial functions. Friends, as you all know, financial functions is one of the very important category of the functions in our day-to-day work. Be it in valuation, be it in any of the projections. So at many instances, we use the financial functions. As I already mentioned, in MS Excel, out of all the bunch of 450 plus functions, Excel categorized the functions into different buckets, out of which one of the bucket is financial functions. As you all know, the other buckets are text functions, where we are going to cover, in fact, next week, left function, right function, mid function, and so on. And there is one more function category called reference functions. Out of the reference functions, in fact, we have covered almost 3 weeks the reference functions. That includes VLOOKUP function, HLOOKUP function, index function, match function, rows function. There are so many functions which are important. In fact, indirect function is also part of the reference function. And we have covered on 9th week the logical functions, where we have covered about if function, and function, or function, if error function, and there are many other functions part of logical functions. So today is completely on the financial functions. I'm going to talk at least 14 to 15 functions, which are very much important for our day-to-day work. After introduction of the functions, I'll take you through the EMI calculation table, how to prepare the EMI calculation table, so that we can see the year-wise outstanding of the principal and outstanding of the interest and so on. So I request everyone, please concentrate into the session without any deviation. So let me directly go into the Excel file. As you all know, I'm talking about the Excel related functions categories. You can go into the financial function. So out of this bunch of, because many of the functions may not be useful for a day in and day out, there are many functions which introduced very recently. So I'm going to talk about, out of these functions, 10 to 15 functions which are relevant for our chartered accountant day in, day out. Let me write the function name. the function name and what this function does. So let's have the description of the function or what this function returns. So I'm going to talk about a function called, okay, NPV. I would be talking about a function called XNPV. You know, there is a minute difference between NPV and XNPV. In fact, both does the same calculation. NPV is nothing but net present value. As we all know, net present value is nothing but the discounted cash inflows minus the discounted cash outflows. But why this function introduced? In fact, for your information, XNPV introduced in the version 2010. Okay, so NPV is the function gives us the net present value in case of consistent periods. That means my cash inflow and outflow happens exactly after 1 year or 2 years and so on. So in a practical business scenario, I don't think so the cash inflow or cash outflow happen exactly after 1 year. So that's the reason they introduced a function called XNPV in the version 2010. So if you are using 2007 version, this function is not available. So this also calculates the net present value in case of inconsistent periods. That means at any of the day, they can invest the cash, or maybe at any of the day, they can be a outflow of the cash. Okay, so let's have one more function because this is connected to the NPV, because IRR is the rate at which my NPV is 0. That's what we read in our books. So IRR is the function returns the internal rate of return, right? In case of consistent periods, again here the same point. Excel introduced in version 2010 XIRR. What it does, it's going to give for inconsistent periods. Okay, friends, let me tell you, for other functions, you need to understand more about the function syntax and so on. For example, the VLOOKUP function, until and unless you are not sure about what is the syntax, what input I should keep, it's gonna be very difficult for you to follow. Whereas in case of financial functions, it's not more about the syntax, because syntax is very simple, because we need to understand the concept more. Before you go and apply the NPV function in MS Excel, I request you first understand what is NPV theoretically. Before you go and apply the IRR function, I request you must know manually how we calculate IRR. Before you go and apply a function called PMT, you must know how on the paper we calculate the equated installment. Okay, so first let me start with these 4 functions, then slowly we'll go into one or other functions. There's a question, it seems, from the participant. Yeah, sir, consistent period means span of 1 year only? Yes, rather you are absolutely right. Consistent periods means exactly 1 year. So after 1 year, after 2nd year, after 3rd year, after 4th year, and so on. Okay, so let me start with NPV. I'll take example here. Let's have the rate. The rate is 10%. Let's take the year. I'm sorry, 1 second. Yeah, let's take the year. Let's take cash inflow or cash outflow. Then you can take discounting factor. Then you can multiply the discounting factor with the cash inflow or cash outflow. This is what manually we do. First, let us try to understand how this concept works manually. Let's say here, let's take the first year. Okay, let's take 1, 2, 3, 4. And cash inflow after 1 year is 15,000, then 5,000, then minus 20,000. There is a chance, then 4,000. Okay. Then I want to have the discounting factor. As you all know, discounting factor is nothing but the present value. Present value of 1 rupee Okay, so after 1 year, if it is 1 rupee as on today, how much the value it is? After 2 years, if it is 1 rupee as on today, how much is the value? So I can use a mathematical calculation, 1 divided by 1 plus this value whole to the power of 1. This is what we learned in our CA days, right? I hope you all agree with me. So instead of myself making this manual, I can simply select this so that if I copy and paste below, A4 will become automatically A5, A6, A7, and so on. Copy this and paste below. If anyone having any question till here, please let me know. Either you can follow this method or there is one more function. Let me introduce called present value. What is the this returns the present value. Okay, so if I want to get the present value, let's have what may be the inputs. Friends, why I'm writing very elaborately, because before you go and look into the function, first your mind should go into the inputs. Before you go and try to work with the present value function, your mind should automatically go into the inputs that what is required to get the present value. So if I want to get the present value, there must be the rate, there must be number of periods for which I need to take the discounting factor, and there must be either the PMT, PMT is nothing but the equated installment, or you should have a future value. Either of these two you should have. You can calculate the present value if you have a equated installment, or else if you have a future value, then you can get the present value. So these all must be the inputs. Do you think any of the input I missed? No. If I have, what must be the future value? If I have how many years for which I need to discount it? If I know what is the rate of interest, I'm sure my present value is ready, right? So are you ready to write the function called present value? Of course, PV. What is the rate of interest? It must be 10%. F4. Because I want to phrase it when I copy and paste, that should not change, comma. Number of periods, because this is one period, because I want to discount it for 1 year, comma. Is there any equated installment here? No. PMT is nothing but the equated installment. In this case, nothing. I can simply keep a comma, or you can keep even 0. Anything is fine. Is there a present value here? Yes, that is 1 rupee, right? So the meaning of this, always try to understand in a plain language that Excel, could you please take 1 rupee and discount it for 1 year at the rate of 10%. So please give me the value as on today. Let me enter. Friends, for your information, future value, when it is a positive, present value gonna be the negative. Basically, how it happens, at the back end, one is the receiver, the other one is the giver. So when you make it negative, your present value will be positive. Simple. So what I do, I don't want to make this as a negative, but I just want to start with minus so that my result will come positive, as well as my future value is also positive. Very good. So instead of myself taking, okay, PMT, I have taken here future value. With PMT, how to calculate the present value? Maybe in the second part of today's session, you will get to know. Let me enter, copy and paste. For which at the back end, this is the formula. Both are exactly one and the same. You should not suspect Excel actually. Okay, many people always suspect Excel that whether it's going to give the correct answer or wrong answer. If you are not trusting Excel, obviously Excel will not trust you back. So you are not going to get the correct answer. You are going to get error. So let's have a good friendship with MS Excel all the time. Let us have trust. So now I need to put this multiplication with this, either this or this. Let me enter, copy and paste. Wow. So I discounted 15,000 rupees at the rate of 10% for 1 year. I discounted 5,000 rupees at the rate of 10% for 2 years. I discounted 20,000 rupees outflow at the rate of 10% for 3 years, and so on. So you can simply make it a 0 decimal. Now the total of the discounted value is nothing but my net present value. This is what a manual calculation. If anyone having any question, please let me know. I'm sure this is the method we follow. Can we say present value is less than 1 and future value will be greater than 1? Obviously, present value will be less than 1 all the time. Future value is always bigger value than the present value. That is what, the if you ask me, maybe in Indian scenario, maybe in some other country where you put the money into the bank, they don't give you anything back as an interest, but they charge the fees from you because you are keeping the money into their bank account. I heard somewhere in some of the article that some of the banks does it. I think in Japan, maybe the concept is other way around, but normally globally the concept of future value is nothing but future. Obviously this value appreciate at the rate of the nominal bank account rate. Okay, good. So this is a manual way method. If I want to do a method with NPV by using the formula, what I'm going to do, simple, equal to, can you please tell me what may be the inputs which are required to calculate NPV? There must be the rate and there must be cash inflows or cash outflows. Cash inflows has to be shown positive, cash outflows has to be shown as a negative. That's the reason I kept in the bracket. So let's go here. Equal to NPV. What is the first argument? Rate. So my rate gonna be 10%, comma. Value one, don't confuse. Many people think value one is nothing but the initial investment. That is wrong. Value one is nothing but the first year cash inflow and outflow. Sharon, if that is the case, if my example is having the initial investment, what I'm going to do? Simple. After entire NPV function, you can do minus or plus to the result, because for the initial investment, the discounting factor is always 1, for which I need not to calculate any present value, as simple as it. So let me take these cash inflows or outflows, close bracket, enter. Okay, don't suspect again, because it has to give the same answer. If anyone having any question, please let me know. Right? Simple. This is a manual method and this is the formula method. Since I have yet to cover the arrays, once I start talking about the arrays, we'll get to know the different methods of working with financial functions. As of now, this is a manual method and this is the function. If anyone having any question with respect to this, please let me know. NPV has not considered the period as one of the variables. See, it has I have not considered because NPV by default consider. Okay, let me write the formula text first so that you can see what the formula I have written. Enter, copy, and paste. So the formula I have written here is equal to formula text. Formula text I can keep here. I have used one more formula for the present value here. I have used one more formula for the discounting factor here, and I have used one more formula for manual method, and this is the final formula I've shown here. Okay, so that you can understand what I have done here. Yeah, the question you are asking. In this case, how Excel does it, let me explain. When you are given the rate B4 colon B7, by default, it multiply the first value with the first year discounting factor. What Excel does at the back end, it calculates the first year discounting factor, second year discounting factor, third year discounting factor, fourth year discounting factor. That value it multiply with each value. Finally, it's going to sum, as simple as it. So I need not to mention whether it is consistent or not, because NPV by default look into the consistent values. Now, for example, if I start changing the values here, now let me make it 1000. Okay, it's very simple. Let me make it 2000. Still, it's 800. Let me make it 14,000. It's negative. So let me make it 2000. It's positive. Let me make it 1000. It's almost negligible. Now what I do? If you do a change here, this value will change. This value will change. But this is an NPV concept, right? But if I want to make it 0, so that could you please tell me what must be the rate here? That concept is nothing but the IRR. Instead of myself changing the value, what I can simply do, I can write a formula here called IRR, so that exactly IRR tells us what must be the rate so that you can get the NPV 0. Okay, so what I'm doing, I can simply put equal to IRR. For the IRR, there is only one argument which is required, the values. You may be surprising how it is going to interpret these values. As I already told you, down payment is not required. So by default, it considered as after 1 year, after 2 years, after 3 years, and so on. Let me enter. So this looks like 10%, but it's not 10%. Don't worry. It's going to be 9.8464. If I make it 2,500, see, it's going to be 8.13%, at which my NPV is 0. If I make it 1,200, it's going to be 7.55%. When I put it 14,250, it further reduces, and so on, right? If anyone having any question understanding these two functions, please let me know. Guess rate, is it optional? Yes, of course it is optional, because while I write the formula, that is there in the square bracket. Guess is basically, in our exams, we are going to guess two values, and between we are going to calculate, as simple as it. Okay, so let me take this as a formula text. If anyone having any question till here, please let me know. But what till here everything is fine. But what is the concept of? What is the concept of XIRR and XNPV? Let us take one more example. Now what I'll do, I'll take the same thing. Let me take the rate as 10%. Okay, now I'll take instead of year the date, because I'm sure it may happen at different intervals during the year, or maybe after a couple of years and so on. So let's take the cash inflow or cash out. Okay, everyone please concentrate. This is very important. What I'll be doing, I'll just simply keep this now equal to date. So let me take today's date, because it's purely depending on the date. Next inflow or outflow will happen after 52 days. Next one will happen after 195 days. Next one will happen, I'm just taking very randomly, 425 days. Next one may happen at 25 days, and next one may just happen at 765 days. These all are different intervals. Do you think these all are consistent? No. Now let me take it 50,000 positive, minus 50,000, then or else minus 14,000. I'm just taking very random figures. So while you work on, you'll get to know. So 11,500. I want to make it 4,000, and this is minus 4,200. Okay, or else minus 6,000. Let's make it. Okay, till here, if anyone having any question, please let me know in understanding the example. Guess it. Is the above table in Excel assuming that cash flows happen at the end of the year? Will the answer be different if the cash flow appears in the beginning of the year? Yes. If you observe, this is by default. Okay, considers cash flow happens exactly after end of the year. Maybe in this example, if you are thinking that there is an initial investment, then you need not to do anything. You can simply put minus or plus whatever the value it is, because for the initial investment, the discounting factor is always 1. Okay, you are correct. By default, it assumes the cash inflow or outflow happens exactly after 1 year. Okay, so if this is the case, now let me calculate the NPV. So I'm going to use the function called XNPV, because it's having inconsistent periods. So returns the net present value for a schedule of cash flows. Okay, the schedule I need to give. Let's take the rate. This is the rate, comma. What are the values? So Excel does understand if it is a positive cash inflow, if it is a negative cash outflow, comma. For each respective value, what is the linked date? This is what the linked date. So in a table, I'm giving the date and the cash inflow and outflow. So it does the calculation at the back end and it exactly give you the answer. If I enter, I'm sure my answer is going to be some value 2028. This is the NPV in this case. Friends, if I just change these values, you'll get to know if it is 30,000. So obviously it get increased. If it is 10,000, obviously it go down and so on. But instead of me making it as a 0, so we have a function called, you cannot make it IRR now, because IRR is only for consistent periods, that too exactly after 1 year. But I need to use the function called XIRR. Generally, when Excel is trying to introduce new function, but the functionality already introduced earlier with a old function, then they start with X. Could you please tell me the examples start with X as a function? In fact, I've covered 2 more functions. You know what are the functions? X NPV, X IRR, X match function, X lookup function. There are 4 functions starts with the name of X. Okay. I already covered X lookup function in the previous session. Okay. Let me see what there's a question. Yeah, X lookup. You are correct, Navi. Great. So let's take the values. So extra argument is there because now Excel doesn't know where it's going to, when it's going to input cash inflow and outflow. So it is just giving me values and dates. Enter. Wow. Trade out. Trade out. It is 9.29%. If anyone having any question understanding this concept, please let me know. Now, if I make it maybe 11,000, so obviously that's go down. If I make it 9,500, maybe that get increased. Maybe 9,200, that may go a little up. You cannot make it because it's just going up. Maybe 25,000, so it's just going negative because even at any combination, that means mathematically this is not possible. Mathematically, in no case it goes down. Okay, that's what the meaning of this. Okay, so this is correct. So let me take one more example to explain you why there is an error. But first, let me give you the formula text here so that you can compare when I just share this file with you all. Friends, I'm keeping everything very elaborate. In fact, whoever part of Vijayawada branch of SARC WhatsApp groups, we are giving every week working files. I request you guys, please download the file because the problem with the Excel users, especially from my classes, is they send so many even personal messages to, yeah, rather if I have not covered X match, don't worry, I'm going to cover. Okay, it's like same like X lookup. I'll cover, don't worry. So many people message me even personally that they want the files, but when I send the file, they have an habit of downloading immediately. But whenever their system is accessed with the data, they delete my folder only first. So don't do that. So please open the file because you have a week time. It's not a regular class, right? So at least you have 1 week time to start looking into the files what I have covered. So let me have the formula text. Rather, don't worry, I'm going to cover that. If not, maybe today, if time permits. This is the XIRR and XNPV function. Okay. For example, friends, I told you, right? Today you have seen one error called num error. I have already covered this error while I was talking about the errors on the second week or third week of our workshop. Could you please tell me when num error appears? Do you remember at what instance num error comes? We have taken a bunch of examples. Wrong argument, no. In case of invalid argument, it's a value error. In case of invalid arguments, just give me 1 minute. Friends, just give me 1 minute. Just give me 1 minute. Okay, I'm sorry. So num error comes, okay, value error comes in case of invalid argument, right? For example, we have seen the example. If I put in double quotation a plus 10, since a is an invalid argument, you get a value error. Sum of a comma 10, it's an invalid argument equal to f. So it must be a logical test. That means Boolean value. If it is not a Boolean value, then it's a error. So n number of cases when you give an invalid argument, but when num error comes, last time we have taken an example. Let's say 10, 20, 30 is there, and I want to take the large function. I already explained the large function. Out of this area, I want to find out the first largest value. So when I put 1, my answer is going to be 30. When I put 2, my answer is going to be, okay, let's take this. Let me copy this formula and paste here. When I put 2, my answer is 20 because second largest value is 20. Now, when I copy this and paste here, when I put 3, my third largest value is 10. But when I put 4, do you know what is the answer? It's not value error, because this is a valid argument because it's an array, and this is also a valid argument because it's a constant. When both are valid, Excel cannot give you value error. But num error is something, the number what you entered is out of the range. That means maybe at the back end of the program, in the large function, the condition must be the second argument must be the less than or equal to the values in the first argument. Okay, so in this case, the first argument is having the values 3, whereas the second argument is having the value 4. Since it is out of the range, the number is out of the range, it's going to give you the number. The same example you can even take for the small function also. I can simply substitute the large with the small. Let me replace all. Okay, it is exactly the same. Take it out, first smallest value, second smallest value, third, fourth is not there. So it's going to be the num function, num error. I'm sure you might have already seen, I have already covered. If I take 1000 comma 100, 100 comma 1000 will give you a random number, but 1000 comma 100, let us see the function. Let's decode the function. Rand between is having 2 arguments, both are mandatory. Bottom, top, in fact, I have given both arguments. Then bottom is a number, top must be a number. In fact, I have given valid arguments only. But maybe at the back end, one of the conditions for the rand between is that second argument must be always greater than or equal to the first argument, or else first argument must be always less than or equal to the second argument. When it is out of the range, because it's talking about the numbers, it is out of the range, then it's going to give you the number. So I can conclude a logic that when a value is going out of the range, it's going to be the number. That means there is no value with respect to the number. Now, why I'm covering this, because you might have seen in this case of examples, number. So what I do, I just take this. Now let's take this. Now, yeah, take it out. Now let's take instead of this. Now I'll simply take this value. Do you think if you give only the positive inflow, anytime your IRR becomes 0? No, it's a num error. It's out of the map, out of the range. So in these instances, you get a result called a num error, because that's not possible to get the result. So obviously, when you have 3 values, it's not possible to get the 4th largest value and so on. Okay, that's fine. Let me just save this file. Let me go back. So XNPV, there is an extra argument that is nothing but the dates, right? Dates. And IRR is the same argument. It's simply the IRR itself is the rate. So let me take this as the argument, but I don't want the rate because I'm going to calculate the rate. In this case, also exactly same, but the rate is not the argument. If anyone having any question till here, please let me know. Yeah, till here we understood about the NPV, XNPV, IRR, XIRR. Simple. Okay, what I'll be doing now. Let us talk something about, when we talk about present value, then I must also talk about the future value. Then for the present value, future value is the parameter. So obviously for the future value, present value must be the parameter. Simple. Okay, so this is a future value. This results the future value. Let's not try something different. Let us try with the same example what we have covered. So when 1 rupee I have taken here, the present value, for the same value, let me take the future value. So what I'll be doing, this is giving me some result, right? Now what I'll be doing, I just give you the future value for 1 rupee. So let's take the FE equal to FE. Let us see the arguments. Rate. So my rate is nothing but this rate, F4, comma, number of periods, because I'm going to look for 1 period, 1 year. So, comma, PMT. Is there any PMT? No, you can make it either 0 or you can ignore the argument, because in this case, there's no equated installment. Is there a present value? Yes, this is the present value. So what I want to tell, Excel, could you please use the discount rate, interest rate of 6.65% for this value? Could you please tell me after 1 year how much it becomes? It is just the other way around, because for present value I've taken 1 rupee. For the future value, this value will become 1. Okay, as I told you, since it's a positive, this becomes negative. So let me put with minus. You can simply copy and paste. So this automatically change. So what are the values I've taken? Yes, let me copy and paste it down. Everywhere my answer is 1 rupee. If you want to get 1 rupee after 1 year, you need to invest today 93.93768. If you want to get after 2 years 1 rupee, you just need to put 87 paise. If you want to get 1 rupee after 3 years, just put 82 paise. If you want to get 1 rupee after 4 years, you just need to give 77 paise. That's all. I'm just working around this compounding. Why are we using A4 comma D4? See, basically, either you can keep, okay, you may be confusing. Let me keep 0. See, since equated installment is not there, I have just ignored this. Either you can ignore or you can keep 0. Friends, for your information, it's going to calculate the 100% range to result. Could you please explain the number error in IRR when you had taken 25,000? Is it more than 100% range to result the number error? You're talking about this, is it? Here? Yeah. In this case, my friend, see, in this case, it will never get the NPV as 0 because it's only having positive values. Maybe in this case, when I have taken 25,000, okay, I have not calculated everything, right? Okay, it is not a number. NPV is num, is it? Okay, let's take this. Why? Because, okay, 25,000, it's going down because the minus value is coming. So, because okay, it's going down because NPV is it's not, it will never become 0. That's what the meaning of it. Okay, it is not going to become 0 in this case, so it is going out of the range. Okay, I hope you get my point, right? Can we say mathematically, not math, yeah, you can say the number is going out of the range, maybe whatever to extent Excel calculate. Yeah, you are correct, Arun. Yeah, you're correct. Okay, so since it's going minus side, and this is also not possible result for the Excel. Manually, if you want, probably with a lot of precision, we can calculate. Okay, good. So now what I do, I just covered about these 6 functions. Let us look into the more about equated installment side, because this is the one which is very important for us when we take when we're trying to apply the valuation, because we are going to calculate what is the outstanding principal after 1 year, after 2 years, after 3 years, and so on. So there's a function in MS Excel called PMT. This is one of the very important function which talk about equated installment. Okay, so do write the formula text for the errors generated. You want me to write your formula text. Okay, I'll just keep this here. I'm sorry. Yeah, let me write here. Okay, equal to formula, not here. Equal to formula text. Copy this and paste here, and equal to formula text. These all are the formulas I've written, so I'm sure you can understand. I think remaining all other places I've written. Is that fine, my friend? Yeah. PMT is basically the payment, equated installment. Okay. If I want to, this returns the equated installment. If I want to calculate the equated installment, let's say you want to take the loan, then once you go to the bank, then if you ask the banker, what is the EMI I need to pay, then banker asks you, banker will tell you rather, what is the rate of interest they charge. Then banker also tell you in how many years I need to pay. Then banker asks you how much loan you want, then present value I should tell to the bank. So if I want to calculate the equated installment, let's say if I'm taking the loan, how much is the present value banker give it to you? That's a loan amount. Then how many years you are going to repay? That's a number of periods. That's going to be the NPER. Then how much is the rate of interest they charge? Right? Yes. So This is the argument. Now, for example, let's say banker, I have already know, let's say I know that this is the amount I want to pay every month. Then I want to know what is the rate of interest for which I should go, so that the equated installment, what I want to pay, I can do that. So if that is the case, rate is not there. So remaining arguments has to be there. Number of periods, present value. Then you should give what must be the equated installment you want to pay. So I have to give the PMT. So this give you the rate of interest. Let's say in the other case, I know that this is the amount I want to pay every installment, and the rate of interest banker has given, and loan also banker confirmed me, but my EMI or equated installment will get increase or decrease based on the number of periods for which I opt. So if I want to calculate the number of periods, remaining all three must be the argument. So let me take rate, let me take PMT, and let me take PV. If you observe here, all are other way around functions. If you know three parameters, remaining parameters you can find out. If you know three parameters, fourth parameter you can find out, and so on. So this give you the number of periods for which you can pay the loan. Okay. This is about just calculation of EMI, calculation of rate of interest, and calculation of NPR. I've already covered about the PV. For example, if you want to calculate PV, then since present value I want to calculate, you can put PMT. Anything is fine. This is present value. That's nothing but the loan. In this context, it's loan, but in this context, it's a present value. Okay. So this is the loan amount. Friends, till here, we will work on how exactly this works. Then we can understand in case of cumulative, how to calculate. So let me just insert one more sheet. And let me take an example. The equated installment, I want yearly, then I want half yearly, or else I want to have quarterly, then I want to have monthly. Okay. Then loan amount, I would like to go for 5 lakh. I know 5 lakh is very small for you guys. Okay. So let's say 5 lakh. Okay. So I want to have the rate of, banker said the rate of interest is 9.25%. Let's say our Poonawalla Finance, for which the Institute of Chartered Accountants of India has agreement, it's 9.98%. So for the time being, let it be 9.25. So let me drag this down. Then number of periods for which I want to pay here is 7 years. Here quarterly means this into 4, number of periods monthly, this into 12. Simple. I hope you got the point, right? If these parameters are available, can I calculate my equated installment? Can I call it as a PMT? Of course you can, because PMT just need to have 3 parameters: how much loan you are getting, what is the rate of interest, and how many years you're going to pay, equal to PMT. Rate of interest, because I want to calculate yearly, let this be same, comma. Number of periods, 7, comma. Present value, this, close bracket. Do you think I'm going to get the answer? Yes. But friends, now are you writing this formula from the banker point of view, or are you writing the formula from the customer point of view? If I'm writing the formula from customer point of view, 5,000 has to be positive, because customer will get into the pocket on the first day, and every month or every year, this is the amount which goes out of the pocket. So in this case, 5 lakh coming into the pocket. So every equated installment, this is outflow. So this is a positive, this becomes negative. Let's say if you are saying, I am a banker, so first day the money flow out of my bank account, then obviously every year, this is the amount which come into my pocket, as simple as it. Okay, just give me 1 minute. There's little, just give me 1 minute. Sorry, guys. Okay. So please explain the yearly concept again. It's simple. I want 1,180,000 is the payment which goes out of the pocket every year. So 7 years, the total repayment. Let me put in this way: total repayment. How much is the total repayment? Simple. This into this. So out of which, what is the principal? Simple. This is the principal. Now let me make it minus just to avoid the confusion. Let me make it minus before the formula so that my outflow, my payment as well as the inflow both will be positive because we are habituated with this language. So this is the principal amount. If I want to know what is the interest portion which I'm paying, it's this minus this. Okay. So this is the one where I have written the formula of the PMT. Now, for example, if I want to do the same for quarterly, copy paste. Now, because my rate must be quarterly rate, I'll just put divided by 4. So for 28 periods, I'm going to pay because my number of periods going to be quarterly periods. If I enter, this is the balance, right? So this is what the equated quarterly installment I need to pay for 28 quarters. Obviously, because you are paying quarterly, the total amount you need to pay may go down because they are getting the money little early than what is required in case of year. So there's little difference between yearly installment and quarterly installment. So the principal amount is exactly same, and you can use the same formula to know the interest. If I want to go for monthly installment, the only change will be now I have to take the monthly rate of interest. Even today, whatever the loan you applied for, you can just write this formula. I'm sure this exactly match. Enter. In fact, this is 7 years and 12 months. Okay, so 84 periods I'm going to pay. So obviously, when you're trying to multiply the total repayment that you paid, that will be lesser than even this amount and this amount, because here every month you are paying. So obviously some principal amount also is getting reduced out of the outstanding. So on the remaining balance, they are charging the interest. As simple as it, right? So let me enter to know what is the total amount. Very small amount it got reduced. So what I'll be doing, I'll just take this. So I'll just take this for the principal, and this gonna be the interest. If anyone having any question, please let me know. Fill the formula works same way for fixed and floating rate of interest, which banks keep changing as notified by the bank based on the RPI repo rate. Of course, yes, but you need to do little more calculation for this because it's not a standard calculation, right? In this case, the rate is standard, but let's say after 2 years, the rate got changed. Now you have to calculate the outstanding as on 2 years. That becomes the present value after 2 years. Then whatever the rate you need to add, and you should calculate for the remaining periods. I hope you got the point, Arun. Obviously, in one formula, that's not possible because that rate keep on change. I need to calculate till the point of time what the rate changes. So whatever the outstanding, that outstanding becomes the present value of that year. Then whatever the change rate, I'll consider as a rate of interest. As simple as it. Okay. So what if monthly interest and quarterly installments? No. Sir, what if monthly interest and quarterly installment? I think you might have taken a CC loan from the Axis Bank. Actually, in fact, they charge monthly interest and a quarterly installment. So if that is the case, you have to go again manually because every quarter you need to pay equally. So after the quarter, they are going to reduce the balance amount remaining on which they are going to charge the interest. So it's a manual calculation with a single formula. Obviously, you cannot get it because the entire logic is different there. So the repayment schedule will be dynamic in case of floating, obviously. That is obvious. Yeah. Okay, so let me go a little further. So till here I have just covered the very basic structure of it works. Friends, let me take here itself just to know whether this is correct. This is a manual method and this also a manual method. In MS Excel, there are 2 more functions. In fact, 4 more functions which talk about the principal and interest. there is a function called CUMIPMT. CUM means cumulative interest payment. So returns the cumulative interest payment, interest from X period to Y period. I'll tell you where you're going to use this function. There is one more function called CUMPRINC, cumulative principal payment from X period to Y period. Okay. So CUMPRINC, CUMIPMT. Let me give you an example like this. Let's say on July 31st, let's say December 31st, let us take a practical example. December 31st is the last date for filing income tax return for the assessment year 2021. So on 31st December evening, 7 o'clock, our favorite client, he came to our office. In fact, individual salaried employee. He has given a form 16. Our staff started preparing the return. Then suddenly before submitting the return, he immediately said, Sharon, stop. I forget that there is a housing loan for me. Then immediately we asked, give me the housing loan certificate. Then he said, Sharon, I don't have at present. Then what you do? Then we work around. Let's say he has taken the loan taken date. I'm just giving you an example. Loan taken date. Let's say he said, Sharon, I have taken the loan on 1st April 2018. Obviously, he remembers when he had taken loan. Then we ask him how much loan you have taken. So he has said, Sharna, I remembered I have taken the loan of 18,50,000 rupees. Wonderful. Then he also remembers the rate of interest. He said 10.15%. Let's say, okay, at least approximate. It need, because in between, if any year there is a prepayment or maybe there is a floating rate of interest got changed, so we cannot do anything, but approximately I'm telling. So this is the way he tells us. Then I'm filing the income tax return for which period? So the start period I want to consider is from the 1st April 2019 till the end period gonna be 31st March 2020. So can I say this is the 13th period of this entire loan schedule? Yes, because from 2018 to 2019 March 31st, 12 periods are over. This is the 13th period till 24th periods. So let me convert this into the general format because this is a number, right? So my start period is 13, my end period is 24. Now, can I calculate from this period to this period, how much is the cumulative principal he paid? Yes, that's possible because I told you there is a function called cumulative interest payment. First, you should tell to the Excel how to calculate the PMT. That means all these arguments will come. Along with these arguments, I'm sure you can easily understand. There must be two more arguments. What is the start period? Start period. And what is the end period? So extra two arguments will come along with those three arguments, right? In this case, the same arguments will even come for the principal. I hope you are getting into the point what I'm trying to do. Sorry, I missed. Can you please start it over again? Yeah, Manoj, you can concentrate, don't worry. Yeah, the start, see, the loan has taken in the month of April 2018 and he paid in the last financial year from 13th period to 24th period because 13 is the period from the date he has taken the loan. Okay, from 13th till 24 periods he paid in the financial year 1920. So if I want to calculate the cumulative principal, I can just take CUMPRINC is the function. You need not to do anything. Don't even put a lot of things into your brain. Simply follow Excel. Excel is asking me to take the rate. Let me take this rate. Of course, because he's going to pay the monthly EMI, so divided by 12. And number of periods. He said, okay, I think this I have not given. 1 second. You know that he's going to pay in years, 10 years. Okay. So this gonna be the 10 years. So let me take a CUMPRINC. The rate of interest is this divided by 12. Then the number of periods, this into 12, because the customer gonna pay in 120 periods, because customer is paying every month, so the rate divided by 12. Then present value, this is the present value when he has taken the loan. Then this give the EMI, right? But I don't want just the EMI, I want how much principal from 13th period till 24th function. Is the payment is exactly after the end of the period or at the beginning of the period? Let's say the payment is obviously at the 0 or close bracket. These arguments are not new to you because we have already covered this. This point, what is the end?
Sir, your audio and video both
What is the EMI? Sorry?
Sir, actually there was a disturbance while explaining, so your audio and video both got stuck. So sir, can you repeat it? The 2 minutes back what you said?
Yeah, is it just ma'am? Yeah. Who is speaking? Radha, is it?
Yeah, sir. Exactly. So
yeah,
you
just
are
give me 2 minutes. Probably I just need to change a minute. Yeah, just give me 2 minutes. Hi everyone, is my voice audible now? Is it okay? Radha,
yes,
Arun, and
fine.
other members, please confirm.
It's fine, sir. You just explain it from the cum principle example.
I'll do that. I'll do that. No problem. Yeah. I hope you all understood the case study at which I have taken this. The case study is very simple. If anyone come to our office without having any interest, housing loan certificate or anything, how to calculate for a specific financial year. Let's say I asked him, he said his loan date is 1st April 2018 and he has taken the loan of 18,50,000 and he said the rate of interest is 10.15%. These are all three inputs we gather from the client. When he has taken the loan, I'm filing the income tax return for financial year 1920, right? So financial year 1920 means 1st April 2019 to 31st March 2020. So number of years is 10, okay, total. So starting period in the financial year 1920 is the 13th period of the loan. Do you all agree with me? Yes, because this, let me put in this way, for 2019 and 31st March 2020. If you want me to put in the numbers, this is the 13th period, because from 1st April 2018 till 31st March 2019, 12 periods are over. Then this is 13th period. Then I'm going to pay till 24th period. Okay, I hope you all understood the meaning of these two numbers. For example, if I want to calculate for financial year 18-19, I'll take from what? 1 to 12. Simple. Let's say if I want to take for financial year 2021, simple. It's going to be 25 to 36. Now, equal to end date, sorry, cumulative principal. The rate of interest is 10%, but this is going to be the monthly EMI, so divided by 2. The number of periods he's going to pay is 10 into 12 because 120 periods is going to pay this entire loan. What is the present value is nothing but the loan is taken. This is the loan is taken, comma. What is the starting period? The starting period is 13th period. You need not to give the date, but you must need to give the number, comma. What is the end period? 24th period, comma. What is the type? Type is nothing but Excel is asking, Sharon, could you please tell me whether the payment is timed at the end of the period or at the beginning of the period? I say it is at the end of the period. Yes, you are absolutely right. But it's not just YTM, it is even live to date also. Okay. If I enter, my answer is going to be for the last period from 13th period to 24th period, he paid, this is the principal amount. Okay. Now to make it positive, I'll just start my formula with minus. I hope you all know the concept of minus. When this is a positive, your cumulative principal will become negative. When this is negative, this becomes positive. I want both are positive. So I started with minus, right? Cumulative interest. Then I can obviously take this cumulative principal under section 80C. Then cumulative principal under section 24. I'll just copy this and I'll paste it. Nothing got changed except CUMIPMT. This is the function name. Okay. Every argument is same. Take it out. Rate is the same. Then number of periods I'm going to pay the loan is same. Present value is same. Starting period is same. End period is same. And type is also same. The only change is the name. So from 13th period till 24th period, he paid. This is the principal. This is the interest. The total he paid this plus this. You know what is a EMI? This divided by 12. Okay. Can we calculate EMI now to cross check whether this is correct or wrong? Okay. I think you are not trusting Excel because you all are saying yes. So don't worry. PMT rate is nothing but this divided by 12. Number of periods going to be this into 12. The loan he has taken is 18,50,000. So let me close this. Enter. Absolutely same. I'm just trying to work 365 degrees with respect to the loan related payments. Any angle you can work on. So maybe if you know the EMI, okay, this you can calculate, or else if you know the inputs, probably these two you can calculate. That's the meaning of the cumulative principal. Now, if I keep here 1, 12 from the first period to 25th period, so obviously in the initial periods your interest is more and principal is less. When I say 1 to 120, could you please tell me what will happen? Anyone put in the chat box? Obviously, he is going to pay 120 periods from the first period till 120 periods. The total principal will become 18,50,000. Why it will become Namara Kasturi funny? Arun, why it is 0? I think you are missing the logic. When I put 1 to 120, the cumulative principal must be the total principal because maximum periods is going to pay is 120 only. Yeah, that's what I'm saying. So I'm saying the cumulative principal going to be 18,50,000 and the cumulative interest is 11 lakh. This is the total he's going to pay. Okay, so you can do whatever you want putting into this. Okay, if you can make a model for each period, how you are going to do, you can even work on. Anyway, I'm going to work that while I talk about the EMI calculator. As of now, if you have any question, please let me know. Right? So just to make it more interesting, this topic, what I do, I'll just make a checkpoint here. This is a manual method I have calculated, right? So can I calculate the same by using the formula here? Of course, formula and formula. What is a formula? Can you tell me? Simple. The same formula what I have used. Cumulative principal. The rate of interest is this divided by 12. The number of periods are this because it's a yearly. I'm sorry, I think it's a yearly, so I need not to put divided by 12. So the number of periods are 7. Then the present value is nothing but the loan, comma, starting period is 1. The end period is 7, comma, 0. Could you please tell me what is the answer it's going to give? Put in the chat box. 5 lakhs, simple. Because I want to take from the first period till the last period total principal. So I want to make this positive. So let me start with negative, simple. So what I'll be doing, I'll just simply copy this. I'll just paste here. I'll just make this cumulative principal to cumulative interest payment. And wonderful. If I want to do the same here, let us see what you are going to do. I'm going to put this divided by 4 because it's quarterly. Then I think everything is fine. So let me enter. Wow. So I can simply copy this. I can, or else, yeah, let me copy this, paste here. My interest will be divided by 4. So I'll get the same answer what I got. Now let me copy this, paste here. This is gonna be, yeah, this is gonna be divided by 12 because it's a, yeah, I'll do that. I'll do the formula text, don't worry. So this is gonna be the divided by 12. So what I'll be doing, the formula text, if you ask me, I'll keep the formula text here. This is the formula text. Okay. So if you want to check, absolutely that matches, no doubt at all, because I am just trusting Excel, no one else. Plus this minus this. Validation controls at every point is most important. Right? Same. Till here, if you have any question, please let me know. Please clarify what is AM. This is a manual method. So directly after calculation of this, I calculated this. F means function method. Okay, this is the function. This is the manual. This is, leave it. This is just using the total repayment, right? Great. So what I'll be doing, I'll just take a couple of other things because I already covered 4 more functions here. I did not cover these 3 functions. As I told you, these 3 functions are just other way around of these functions. So let me go here. Let us take in this way properly. Let's take the loan. Let's take the PMT, copy this and paste here. Now let me take the monthly, because for monthly I want to calculate. Let's take same parameters, copy this and paste special values. So this is gonna be the same, and this is gonna be the same, and this is gonna be the rate of interest. So no, actually. So I'm not sure about MIRR to work more. Maybe I can just if today is not sufficient to cover, maybe next week I can come with any of the missing financial functions. I don't know. Yeah. So this is the one. Now, friends, let me remove this loan. Since I have other 3 parameters, do you think I can get the loan? Yes, possible, because I know what is the rate of interest, I know what is the NPR, I know what is the PMT. Simple, equal to PV, because I want to get the loan present value. This is the rate divided by 12, and this is the number of periods, comma, and this is the present value. As I already told you, since the present value is a positive, my PV will become negative, I'm sure. So let me start with minus so that you will exactly get the same answer of 5 lakh. Or else, let's say the situation where I have 5 lakh. Okay, so in this case, rate is not there. Rate is missing. Can I calculate the rate? Of course. You have a function called rate. So number of periods is this, comma. My PMT is this, comma. My present value is this. Could you please tell me what is the answer it's going to give? Anyone, please? Anyone? Logically, please answer. I don't want just a blind answer. I request you to please logically answer. 9.25%. Is it? Logically, I think you guys are missing the logic. Okay, 9.25% divided by 12 by Arun, by Kasturi, Ifani, Surendra, or let me enter. Can anyone guess why it's a numerator? Can anyone guess why it is numerator? Anyone out of the class? See, I already told you, if this is positive, this must be negative. If this is negative, this must be positive. But in the formula what I have written PME is positive, PV is also positive. Excel said, Sharon, I do not understand what you're trying to tell. Either you can put this negative or you can put this negative, then Excel do understand this. Yes. This is a monthly one, so I need to make it yearly, so into 12. I hope you got the point, right? Yeah, the point which I'm trying to tell, as I already told you, loan is an inflow and this is the outflow for the customer. Rather, loan is the outflow for the bank, equated installment is an inflow for the bank. So either this must be minus or this must be minus. But in this present case, this is a positive and this is a positive. That's not possible. So that's the reason Excel is saying numerically it's not possible. Okay, so that's the reason I kept, I think rather you got the logic. So I just made it minus. So let me put into 12 because it's a monthly interest. So I got it. Yes. Now, for example, let's take this. If this is not there, let's say it is missing, then what are you going to do? What's the function you have? NPR. Language is very important. Simple, the rate is this divided by 12, then the PFT is this, then the present value is this, close bracket. Could you please tell me what may be the interest in this case? Put in the chat box. What is the answer in this case? It's going, I don't know, it's going somewhere negative side. Okay, so maybe what he's saying, Sharon, if you go and reverse, I don't know what Excel is saying. There should be an error ideally. So I'll give you a proper reason for this. Okay. So why it is taking to the negative years? Okay. So if it is basing at 0 today, when it is going back, maybe it's going to match the PMT. I don't know. Okay. Anyway, ideally this must be the numerator. I'll find out the reason why this is. Maybe mathematically in this particular, because we need to know little architecture at the back end. In this case, maybe we need to understand how it is exactly working at the backside. So as of now, leave it. I'll give you the reason. Maybe had paid 50 months. Yeah, that's what I'm saying. Maybe today they are considering as one. So since it's both are positive, they are saying you should go back. Maybe it's doing a back calculation. Yeah. Enter. So this is 84. Yeah, obviously every time PMT must be the lower than the loan. Okay, anyway, I'll find out the reason. I'll tell you how exactly it is calculated. So again, let me, don't worry, I'll do that. This, in this case, I've written a formula of this. In this case, I've written a formula of this to calculate rate. In this case, I've written a formula of this. Because anyway, I'm covering all three. Just for the example sake, this is the fourth one. Copy this and paste here. Okay, if this is missing, oops, this is the one. If this is missing, you have a function called PMT. Okay, all four functions you can see here. If this is missing, remaining three are the feed. If this is missing, remaining three are the feed. If this is missing, remaining three are the feed, and so on. So let me copy this and paste it. Oops, what happened? Oh, I'm sorry, because there's a formula. The formula must be into this one. Yes. This calculate present value, this calculate rate, this calculate number of periods, and this calculate the PMT. Anyone having any question? Okay, I'm just trying to give you a different methodology to work out different functions so that you can remember easily instead of myself giving a function after function. Okay, so what we do now, we will make the EMI calculator so that you can understand from top to bottom how the entire EMI works. Let's take the loan of then let us take the loan of loan at the rate of 8.75%. Let us take the number of periods as 5. Okay, so this is the PER. I hope you understand the language. PER means period. So I'm going to pay this in 60 periods, right? Because it's a 5 years. So what I'll be doing, I'll just take PER. Let me take 1 year, 2 year, and so on. Let me drag this down to 60. So let me drag this down to 60. So let me drag this down till 60. Okay, please concentrate. This is a period. Now I want to know what is the EMI. Could you please tell me the formula quickly? Equal to PMT. The rate of interest is this because it's a monthly rate divided by 12. Then the number of periods is this and into 12 because I'm going to pay in 60 periods. Then the present value is this. Okay, so let me close this. But this value should not change when I copy and paste. So let me take this. Let me take this with the dollar symbol, and let me also take this with the dollar symbol. Enter, copy and paste. Obviously, why it has given the same answer? Because EMI will never change. EMI means equated installment. It has to be same throughout the period, right? Now I want to know what is the interest portion out of this and what is the principal portion out of this. This is most important, right? So that I can do a lot of cumulative methods here. There is a function called, okay, IPMT. Earlier one is cumulative interest payment, right? This is IPMT. The only difference is you will have which period you want to calculate the interest. Okay, obviously, right? I want to know for a specific period, it's IPMT is the function. So it's going to be the interest portion for nth period. There's one more function called PPMT. Exactly the same principal portion for nth period. Okay, now let's go here. I will use this function called IPMT. In all these cases, if there is a margin money payment 50,000 in year 1 can be deducted from 5 lakh. Yeah, obviously your loan. I didn't get your point, Arun. Could you be a little more elaborate? What do you mean by margin money? Arun, if you don't mind, can I cover this? Then we'll go into your question to understand more. If you don't mind. Yeah. So IPMT means interest payment for the nth period. So rate this divided by 12 because it's a monthly, periods this into 12 because it is monthly. Now, so sorry, I think PR is nothing but the nth period. For which period you want to calculate the interest? This is the period. Do you agree with me? Yes. Comma. How many number of periods you are going to pay the loan? So I'm going to pay this into 12. Comma. What is the present value? This is the present value. I want to make this also with the dollar symbol so that it will not change. Obviously, this is a positive, this becomes negative. So let me start with minus, enter. So in the first year, first period, you will be paying 3,646 as an EMI. Let me copy and paste this down. Wonderful. Equal to, I want to calculate the principal, right? Nothing will change. Control C, Control V, Let me put instead of I, P. That's the advantage of Excel. If you know one formula, the other formula is a bonus to you. Enter, copy, and paste. How do you know that these formulas are correct? Simple. Let me have a check. This minus this minus this must be 0. Copy and paste. Okay. Obviously, principal value will be higher lower in the initial portion. Then when you go towards the maturity, then that will become higher. In the same way, interest will be higher in the initial days. When you go towards the maturity, that will become 0. Simple. Okay, so this is the interest calculation and principal calculation for a specific period. Now let us again have a very quick recap of cumulative functions here. Okay, so that I can cover 2 to 3 concepts together. If I want to have a cumulative interest, what I'm going to do, equal to sum. This is an elastic formula I have already given. So elastic range is nothing but this column, this. What I need to do, give the dollar symbol here, enter, copy, and paste, so that this give you the running total, right? So cumulative principle, what cumulative principle does? Same thing, equal to sum. This column, this, let me make this elastic, copy and paste, so that this becomes a running total. As simple as it. Okay. But friends, this is a manual method. I want to make it as a function method. So how can I do this using CUM IPMT? And how can I use doing CUM PRINC? Could you please tell me what formula I should write here to get the same figures? Anyone, please? Anyone put in the chat box? I'll give you 2 minutes time. What is the formula I should write here? I'm sorry. What is the formula I should write here so that I should get the same figures how I got here? Everyone, I'll give you 2 minutes time. Please work on. No problem. Let me explain you. You can understand later. Okay, you can maybe try it later. Equal to, I want to have a cumulative interest payment, right? So CUM IPMT. What is the rate? So I'm writing again and again so that you'll have a practice. This divided by 12 because monthly. How many number of periods? This into 12, comma, then. What is the next argument? Next argument is present value. This, comma. What is the starting period? This. I want my starting period has to be same because I want to make it cumulative. So let me make it elastic. This, comma. What is the end period? For the time being the same, comma. Is it at the end of the period? Yes, close bracket. Friends, if you observe, rate I have to freeze it because this should not change. Number of periods I should not freeze it. I should freeze it because it should not change. Then present value I should freeze it because it should not change. Even the starting period I phrased because one should not change. But I did not phrase this. I did not give any dollar symbol here because when I copy and paste, that should automatically take 2, that should automatically take 3, that should automatically take 4. When I copy this formula and paste here, it's going to calculate the interest from the first period till the 4th period because my starting period is same, ending period is elastic. So I can start with minus because it's giving me a negative value. Let me copy this and paste below. Wow, it has given me the same answer. If anyone having any question, please let me know. Right, so cumulative principle is exactly same, but I just need to change the title of the function, PRINC, copy and paste. So what I can simply do, copy, paste special format because I want the same format. So if you check with the manual process what you're done and with the formula that has to be same, this minus this plus this minus this. Validation controls are always important in MS Excel so that you will have a confidence the formulas you are written. Okay, this is a EMI calculator starting from the first period till the last period you'll get to know. Now friends, maybe let me go a little other way around. I want to know how much is the loan outstanding. What I can do, let me have outstanding balance. Can anyone tell what is the formula? Simple. This is the loan minus this is the cumulative principal. Sorry, this is the cumulative principal. So as on after the first period, this is the outstanding and so on. Enter, you can copy and you can paste. Wow. So here 493 is outstanding after 2 periods, after 3 periods, and so on. So when you are going after 3 years that you want to pay the entire loan, then they may say that Mr. Sharon, still the loan outstanding of the principal is 217,766. If it's a floating loan, there is no prepayment charges. If it is not a floating, then there is a prepayment charges and so on. Okay, this is a method of working. Now friends, so what I do now, either you can do this method, and let us take a little more elaborate. Let us say start date of the loan, date of sanction. To make it simple and work better, I'm taking 1st April or else 1st September 2017, right? Then if you observe friend till here, there is no manual method, everything is formula based. If I change these parameters, this everything gets changed automatically. Now I want to know the due date of the loan. I hope you all got the point, right? So I want to know the due date of the loan. Oops, yeah. So could you please tell me what is the due date? That means 31st September 2017 must be the due date. Sorry, 30th September 2017. Then second period will get over on 31st October 2017. Third period will get over 30th November 2017. Could you please tell me what is the formula or a function I must need to use here to get the due date? Anyone? Absolutely. There is a function called EVO month, equal to EVO month. You are wonderful. This is my start period, start date, comma. How many months you want to add this? But unfortunately, if I add this month, that give me the next month end of the day. But I want this month end of the day. So what I'm going to do, I'll put number of months -1. So end of this month. So if I copy and paste, after 1 month, end of the month. After 2 months, end of the month. After 3 months, end of the month. After, and so on. Check it out. Wow. Any question? Anyone? Please let me know. Yeah. Okay. Great. Now, let me freeze till here so that we all can understand. Let me freeze the paint till here. Now, what I do, I'll make a small calendar here. Friends, I think last time I have covered about a small function awaiting for the formula text. Rather, okay. Rather, I hope you are getting the files every time. Don't worry, I'll do that. So what I do, I'll just copy this, or else let's take this, copy, paste a special transpose, right? So let me give the formula text here. So let me take this as a formula text. This doesn't have any formula text, so it's having nothing. This is having a formula. That's EMI. Let me have equal to formula text. That's going to be the interest D5, then DE, right? So it's going to be the E5. Sorry, E5. It's going to be the F5. It's going to be Z5, G5, then H5, then I5. It's not high 5, it's I5, then J5, then it's gonna be K5, then this is gonna be the L5. Are you okay? Yeah. So I do get the value, but the formula text makes easy to trace. So this formula text function is not available in my version. As I already told you, Manoj, formula text is from 2013 version. So you may be using the below version of 2013. Okay, so these all are the formula text for these columns. Can I go ahead? Yes. So what I would like to do now, I want to make a calendar so that for each financial year, I want to know, okay, what is the cumulative interest or what is the cumulative principal? So here, let me add one column. So let me put control plus towards right. I am going to use a column called financial year. Concentrate everyone. I want to just select these columns. I have to make it autofit. Yeah. So financial year is the function. It's not function. Financial year I want. Can anyone please tell me what is the financial year? I want to get your financial year. This is 17-18. This is a financial year 17-18 and so on. Because these all are one after other, you can easily do it. Till here it is 17-18. For next 12 months, it's going to be 18-19. So financial year 18-19. Then next 12 months, it's going to be 19-20. So this is going to be 19-20. And this is going to be 2021. So let's take 20. Let's take 21. This is going to be 21, 22. And finally, this is going to be 22, 23. Oh, sorry, 22, 23. Right? So this is not required. Because it is just 5 years, we have done in a very simplest way. But here, I can use a function to get this result. I think I have already given this as an assignment. If not, okay, please concentrate. Because almost all the functions I have covered to get this result. Everyone, please concentrate. I want to get the financial year. I know the rules of the financial year. If, okay, because see, first of all, I want to have this format. Financial year 17-18. Do you agree with me? Yes. Or else you can put 2017 and 18. Some people keep in this way, or else some people keep 17-18. Let us say 2017-18. Friends, for your information, this is anyway required irrespective of the result. Yes or no? So what I'll be doing, I just keep this in the double quotation. This is depending on which month this is. If the month is greater than or equal to 4, then I'll take the current year. If the month is less than or equal to 4, then I'll take the previous year, right? So since there is a condition, let me join this financial year space with the condition. So what is the condition? I'm going to use if function. So what is the condition? I'll first extract the month out of this. Then I'll ask Excel, cross check, is it greater than or equal to 4? If it is, let's say if it is greater than or equal to 4, what I need to do? Simple. Let me take the year of this, join with hyphen, because you will get the year, you will get the FY space year hyphen, then you will get the year of this and the last 2 digits of the next year. So what I'm going to do, I will have 2 digits of the next year. So what I'm going to do, there is a function called write function for the year, or else you can even use the text function. Text for this, comma, let me put YY. So could you please tell me, this one give you what? This one gives me, okay, 17, because the last 2 digits. But do you want 2017 iPhone 17? No, I want to have +1 because 2017 iPhone 18 18. If anyone having any question understanding the value if true, please let me know. I hope you all understood. FY space is nothing but the text which is constant, and the symbol is to join the text with the other text. If function I have used to cross check whether the month name of this is greater than or equal to 4. If so, then year of a file, that means this year you please take 4 digits because year function by default give you 4 digits. iPhone next year 2 digits. How to get, first of all, next year? This year +1 is the next year value, right? Great. Now friends, if not, that means if it is not greater than or equal to 4, that means it is less than 4. If it is less than 4, what I'm going to do? Simple. I just simply do this Control C. I do Control V. Simply what I can do, you know, I will just take here -1, but I'll simply remove this. I think I'm done. If anyone having any question, please let me know. There are 2 conditions here. This is the logical test. If this is true, take the current year iPhone, the 2 digits of the next year. If I enter, do you think I'll get my correct answer? Of course. Now you can simply copy and paste. Wow. Later, maybe after the session, you can analyze this formula better. In fact, I've already covered this in the previous examples. See, all these functions I have covered. I've covered about if function, I've covered about your function, I've covered about text function. I did even cover about the AND function, AND symbol. Now, friends, because it's 5 financial years, let me copy this and let me paste somewhere. Okay, let me go. I'm sorry. Yeah, I want to have the financial year, the principal I paid, the interest I paid. Okay, and obviously you'll get the outstanding principal. That's a different story. So if I want to have the principal financial year, then what I'll do, let me copy paste here. I can remove the duplicates. I'm sorry. Copy paste special value. Copy paste special value. I can simply go to the data. Let me remove the duplicates so that all the financial years will come. Click OK. Great. Now what I'll be doing? Simple. I can do the sum if function. Sum if. Look into which column? This column. For what? For this value. And get me the total of principal. So this is the one. Close bracket. Enter. So for the financial year 17-18 you paid. This is the total amount. This is year on year. Right? In the same way, I'll just copy this. I'll paste here. The only change will be, you know what? Let me go here. Instead of principal, let me drag this to interest. So let me copy and paste here. So let me give you this. Okay. This is the way it works out. If you want the balance outstanding after this year, how much at the end of the period rather, so you can just take this. I'm just working around the same thing because I don't know what method you follow, what requirement you have, but I'm just trying to give you different methods. That's all. Okay. So if you have any question, please let me know. I'm sorry, I think I missed it. I'm sorry. Okay, so I must have a cumulative of this, right? So sum of, because he's paying this into this, right? So let's take this column, this. I like the cumulative formula actually. So F4, enter, copy and paste. So at the end of 2023, it is 0. That's all. So you can use this table in any of your calculation or financial modeling or anything. Any question? I hope you all enjoyed this part. But okay, in the financial year formula, can you please explain the second part? Okay, let me give you how exactly it works. Let me remove the freeze, because of the freeze I think you are not getting properly. Okay, now friends, I can make it proper into the pieces. So let me join that with if function here. If function does have 3 arguments, logical test, then it does have year, then I'm trying to join that with the text function, then it's going to be this. Okay, then let me close the if function. Okay, so I'm sure you can understand out of this. So let me make this with a proper screenshot. So that I can write something if I want. Copy this, or else let me just make this. It's just the way of presentation, right? I think rather you can understand better now. I want to join this part is anywhere required. I'm asking a question, the logical question. The logical question is it true? Okay, so the logical question is, if the month is greater than, if the month is, let's take a different color. If the month is greater than this, then greater than or equal to 4, then if it is true, then you take the current year. That means A5 is having a date. This give you whatever the year, 2010 or 2011 or 2007, and so on and so on. So then it is just joining with an hyphen, because anyway financial year 2012 or 2013, yeah, hyphen is required. Last 2 digits of the year, right? So that's the reason I have taken the date, and in the double quotation YY, I hope I have covered these codes. Do you remember the codes which I have covered about D, 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 M, MM, triple M, 4 M's, YY, YY, YY. So when I put YY, it's gonna give the last 2 digits. Then because I want to take current year, then join with them next year, right? That's the reason I said +1. In fact, you can ask me a question, Mr. Saran. Mr. Saran, this give us a text, right? But though it's a text, because I'm using in the arithmetic expression, it automatically turns into the number. If it is less than 4, then next year, this gives me the previous year. Then this is the current year. So previous year 4 digits, current year 2 digits. If both are 4 digits, I need not to use this function. I can simply use year function. Because this is 2 digits, this is 4 digits. That's the reason I have taken year and text function combination. Radha, I hope you got the point, right? Any question? Anyone? Yeah, formula text. Don't worry, I'm going to keep. So let me keep this part so that since that it is little Indian formula, you will not confuse. Let me copy this. Okay, let me paste somewhere towards right side. Yeah, financial function form. So okay, this can be for a quick reference to you. That's all. Any question, anyone? We just quickly completed. Yeah, you can play around. So if you are good with Excel, financial functions, logical functions, you can do n number of things. Okay, any further questions? Please let me know. Someone when I was talking about X lookup, someone said I did not cover. I remember that I have covered, but anyway, let me cover very quickly what is X lookup. First, in fact I have covered, because while I was talking about the limitations of the VLOOKUP function, sir, why we have taken month greater than 4? I said greater than or equal to, Nina, because financial year means 1st April till 31st March, right? Month is a function which gives us a number of the month. For example, in this case, it's going to give 9 as an answer, month function, 10 as an answer. If Yeah, sir, it was X match. Oh, I forget. I'm sorry. Rather, correct. It's not X lookup, but it's X match function. I'm going to cover it over. So, yeah, I think Nina, you got the point. Why we have taken the month greater than 4? Because I want to compare. If it is greater than 4, that means it is April and above. If it is April and above, that belongs to this year, I for next year. If it is less than 4, that means till March. If it is till March, that particular date belongs to the previous financial year. Right? I'm sorry, I need to explain the X match function, but not X lookup. So, as you all know, the match function is very simple. A, B, C, D, E, F. And you can ask the question, if I want to know the position of A equal to match, then look for this value where within this array, get me the exact match. If I put B, second position. If I put E, fifth position. If I put F, sixth position. If I put B, it's the second position, right? So we have a function called X match. It's written the relative position and an item in an array. By default, exact match is required. The small change of the match function and exact match function is, in the match function, if you ignore the third argument, by default, it considered towards the downside. Whereas in this case, by default, it's an exact match. So if I take X match, lookup value is this. So my lookup value is this. Lookup array is this. Then match mode. See, you can, by default, it's an exact match. If you want, you can ignore. Let me take exact match. And exact match are next to smaller item. This is just, even earlier it was there. That means downside it looks upper side. This is a wild character match. So this comma. Do you want to check from the top to bottom or bottom to top? This example also I have covered. So for example, if I take top to bottom, so let's take 1. It's 2. Now, let's say B is here, right? Let's say B is also here. Still my answer is 2. But for example, when I keep -1, last to first. So it's going to start from the downside towards the upside. 1, 2, 3. The third value, now I'm going to get the answer. 1 second. 1 second. Search mode. Last to first. I'm trying to search for 1 second. So first to last is correct. So I want to start searching from the last to first. So -1. Yeah. Because this is a very recent function. So exact match I have used. Then I'm trying to look this value position out of this range. And I want to get what is the position of this value in this range. So by default, your answer is 2, because by default, it's going to talk from top. But when I say from the bottom position of B must be, it should not be 4, right? It must be, oh, okay. I got it. See, the position it's going to give from the top only all the time. It appears to me like, now let's say C here. Now let's say B here. Yeah. Okay. So, but X match only works in case of repeating 2 times. Let's say if something B is here, let's take a G here. Okay. Now let's take a G. Now this is B. Now this is E. Now this is B. See, you have only 2 options. Either you can ask Excel to start from top, then answer is 2, or else you can ask Excel to start from bottom, then your answer is 1, 2, 3, 4, 5, 6. You're correct. Okay, so in this case, if I take this till here, now if I take it, my answer gonna be 6. But when I take it +1, my answer gonna be 2. You cannot say if second value is there, third value is there, how to do this. It's better if you explain it by name rather than an alphabet. Yeah, it's I'm just trying to see where we can fit this example. 1 second. Even I'm trying to see where we can fit this case study. We can take anything. I think we can take the company name. Sometimes rather just give me some time. I'll try to see where we can fit exactly. Or else what I do, using the X match and X lookup, I can make a combination example or exercise, then probably we can cover. I think that's better. So I'm just trying to give you a concept in the X lookup, okay, and X match. The extra additions are nothing but by default it's exact match. That's a one new thing, but earlier it was not the case. One second. Exact match here also by default exact match, but earlier in the match function or VLOOKUP function by default it's a approximate match. Now in this case exact match. In case of VLOOKUP XLOOKUP function, earlier we used to take a table array. Now we are taking two columns. One is lookup table, lookup underscore array, then the result underscore array. Instead of taking a table, now we split the same into the two columns. With respect to the same, there is no change because earlier also one column. Now also we are taking one column with respect to this. And earlier it used to always come from top to bottom. But in case of XLOOKUP, it can even look from bottom to top. Bottom to top. Here also it can look from the bottom to top. These all are the extra functionalities it has given. If you think in a case it's not relevant, we can ignore, but Excel has given an extra functionality. Maybe what I can do, I think XLOOKUP very much better I have covered in the previous case study, previous session. XMatch, I'll try to prepare a best suitable example, then I can explain maybe in the next session. Okay, but these all are the things what it does in the new XMatch function. Is that fine with everyone? Okay, so elaborate upon the difference between match and XMatch. That's what I'm saying. Rather, a match function. I hope you all remember when is the company that is the best combination with respect to the VLOOKUP function and the index function. It's going to give you the position number. But sometimes if I want to find the position number from the bottom, then XMatch may help you. In the match function, it is giving you by default approximate match, whereas in the XMatch function by default exact match, because many a times we try to look for exact match than the approximate match. Okay, that's what I said. I'll explain maybe with the proper example in the next session. Any questions, sir? In the earlier class, you said that about control open bracket, so going to refer to the cell, how it is working, cell. It's very simple. For example, when I want to refer here equal to this cell, when I do control, yeah, Radha, can you go ahead? You can unmute and you can speak.
Sir, exactly. You explained the X match, right, by A, B, C, D, E, F. So my question was, you said that in double times, if you enter, for example, B, so it is giving you the exact match, which is not as compared to match, not present in match function. So regarding it, I needed to know.
Yeah, that's what I said. In the X match, that's extra functionality it has added. In the match function, the array, the value what you are looking must be only at one place. If it is finding more than once, match function doesn't give you the answer. It always look up the first value. Whereas in the XMatch function, even it repeats second time, it's going to look from the bottom. But when it repeats third time, but you are asking for the second value, second time position, even XMatch cannot help you out. Can you got some understanding? My point, probably you can put on the Excel, you can just start looking into the arguments, then you can understand much better.
Sir, I got your point that only if it is two times, then only, but it is if then more than two times, then it is not possible even through
Again, it's not possible because I should give the instance number. With this related example, I think I have already covered in the case of VLOOKUP function. Do you remember I've given an assignment where A is getting repeated many times and I have taken instance number is the one. Are you getting the point? That is the method we need to follow if it is repeating more than once. Okay, 1 second. Let me probably explain lookup functions. Did I cover the VLOOKUP function, HLOOKUP function? Of course, I think.
yes, sir, you had covered.
Yeah, just give me 1 second. I think I've given you the assignment. Yeah, this is the one. Rather, do you remember this assignment? In this assignment, when it is repeating more than once, then I went into a different method. So obviously we don't have a direct formula. If it is only repeating 2 times, either you can start from the top, or for the second one, you can start from the bottom. But when it is repeating 3 times, okay, so then I used this method. I already covered this elaborately. Maybe you can go through the material rather.
Sir, I remember this.
Yeah. Okay, this the same type of methodology maybe I need to use even for match function if it is repeating more than 2 times.
Okay, sir. So ultimately, we should use the lookup functions for this if it is repeating more than 2 times.
Correct, correct. Okay, it has just added one functionality. Maybe I don't know, in future they may come up with more functionality, like even instance number it's going to give automatically, so that the work will be much more simpler. Do you want second instance of B, or do you want third instance of B, and so on? But as of now, what Excel said, either in the X lookup function or X match function, Sharon, I can only consider 2 values. If it is 2 value, either you can tell me from the top or you can tell me from the bottom. But for the Excel, either from the top or bottom, it's the first value. From the top, it's the first value, and from the bottom, it's the first value. Okay, so for us, it's literally 2 values it work. So yeah, sequence function is very recently introduced. It's one of the dynamic function. Okay, we'll go into that when I talk about the dynamic functions. Okay, so don't worry. So I think I was explaining about, yeah, one of the question by Kasturi. I'm sorry, I went into a different question. So Kasturi was asking what is the shortcut about control open bracket. Basically, if I want to go back to this, so I can use control open bracket so that it will take me to the precedent on which this function depends. So control plus open bracket, it exactly go here, right? You got the point, because I have given a reference from here to the other sheet. Then you can use control open bracket. Otherwise, you can just go to the formulas tab and you can click trace trace precedence. Since it is outside the sheet, it has given me a black arrow. Once I double click this, then it exactly take me to the same link. Both are one and the same. No, it's not control shift open bracket. It must be control open bracket. Control open bracket. It's not that open bracket. It's a curly bracket. See, it is control plus open bracket. But if you use control plus open bracket, this is a hide actually. So let me use control open bracket. Control open bracket. It has hidden. Okay, that's all. I think I tried my level best giving you the financial functions, important financial functions in much more different ways, including the calculation of the EMI table, from which we used some of the date functions, which we already covered, EO month and financial year function. With this, you can calculate this type of sheet. That's all, guys. Thank you so much. And whatever the pending questions, don't worry. I do remember, I do practice every time, than more what you practice. So next week, whatever the missing topics we are going to cover, I think next, just give me another 1 minute. Next week gonna be, I missed the offset function because of the time constraint. So next week I'm going to cover about offset function. Then we'll start the text functions. So once the next week is over, all the important relevant functions are over. So from the in 15th week, I'll talk about the advanced category of the function that includes how array function works. Okay, from the 16th week, that means after 15 days, I'll start talking about the data analysis part. So I request you, we slowly are going towards the important topics. So don't miss any of the week session. Even if your friends are there, you can ask them to join into the sessions. The sessions are live all the time in the YouTube. And there is a playlist also in the Vijayawada branch of SARC YouTube channel. So you can just go through the videos that are sequentially arranged. Thank you so much. Thanks for your patient hearing. See you all in the next session. Bye-bye. Sir, are you there? Anyone from the Vijayawada branch? Yeah, thank you so much. Bye-bye.